Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove those moves. As a reminder, before we get started, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Okay, well, things have been definitely a little quieter this week, which I guess has been nice. I know everyone's still kind of bracing for some more regulatory action. But in the meantime, I've got some fun market movements to talk to you guys about. So first up, we have Kanto. So if you're not familiar with Kanto, it's pretty new. It is a layer 1 blockchain that is built on the Cosmos SDK ecosystem. And so Kanto passed a 30% emissions reduction for stakers and liquidity providers last week. Basically, Kanto differentiates itself versus other layer 1s by offering kind of like the major apps that are built by the Kanto team, and they don't have like a separate token. It's considered public goods. So instead of having a DEX with its own token, a lend borrow with its own token, a stablecoin issuer with its own token, those are all just baked in primitively into the Kanto ecosystem. And then what happens is that there's essentially like a rev share agreement. So anytime gas fees are spent on any of those apps, part of that revenue actually goes back to the developer who created the code for that specific application. So pretty cool new kind of model of layer 1s, and it's definitely taken off in terms of getting a lot of traction. So a lot of people are hoping that the emission reduction for stakers and liquidity providers could potentially help the token price. Also, the SushiSwap CEO Jared Gray tweeted #Kanto, implying that SushiSwap may get involved with the chain. Some little stats for you guys. Daily active users were down 46% week over week. There's been a lot of NFT speculation and hype on the Kanto chain because it's new. And so a lot of that speculation's kind of died down. And the TVL on the chain was also down 5%. With all this, Kanto is down 3.4% for the week. All right, next up we got Polygon. Polygon or MATIC. You guys have heard me talk about this one before. It's a layer 2 scaling solution. They announced last week, big news, that they're going to be launching its long-anticipated ZK EVM product at the end of March. So you're all probably wondering, what is a ZK EVM? So basically, it's a type of layer 2 that's going to allow projects to deploy compatible smart contracts on the layer 2 without having to redo their code bases. So EVM stands for Ethereum Virtual Machine, if you're not familiar. And basically the biggest kind of issue with kind of porting off of any EVM-based blockchain, which would include Ethereum, like BNB chain, Avalanche, kind of a few of the other majors, not Solana. Solana is not EVM compatible. You have to like recode your whole code base. So it makes it really difficult if a project is already deployed for them to then go and recode their code base to deploy on a new layer 2 potentially. So the ZK EVM is definitely like a really great project. It just potentially brings in more projects onto the ecosystem. Along with this news, though, Polygon also announced that they're going to be laying off 20% of their workforce in a consolidation effort. Despite the layoffs, the team has reiterated that they still hold $250 million in its treasury and 1.9 billion MATIC tokens. MATIC traded up just 3.1% for the week. All right, now we get into some more of the like crazy high flyers for the week. So Ankr, which is a Web3 infrastructure provider, announced yesterday that it's partnered with Microsoft to offer blockchain node infrastructure for enterprise clients. So basically the idea is like between both Microsoft's software and the software available on Ankr, these enterprise clients can basically access blockchain nodes through Ankr and then rely on the Microsoft like cloud infrastructure for like scaling that or like data storage. So the program just aims to allow enterprises to access blockchain data and understand how they can use the technology to solve real world business challenges. So definitely some exciting, enterprise adoption that we're seeing here. Hopefully that means that Microsoft's partnership was driven mostly out of client side interest in the space, and we'll hopefully can see that continue. So with that, Ankr's up 50%, 56% for the week. All right, last we have Conflux. So this is a bit of an odd one, but I thought it was worth mentioning given that the last week there has been a lot of rumblings of Hong Kong and even China opening up the gateway for crypto trading in and easing those restrictions in China. So Conflux is a layer 1 blockchain. They claim to be the only regulatory compliant public blockchain out of China. They announced a partnership with China Telecom to launch blockchain-enabled SIM cards, or what they called BSIMs. As the second largest carrier in China, the partnership would open up Conflux to access China Telecom's 390 million customers. The pilot is planning to launch in Hong Kong and then roll out to mainland China. Basically, these BSIMs, they're designed to securely store like public and private key combinations physically on mobile phones. And the idea being that users can then safely store digital assets on their phones. So I'm not going to comment on, what if this is secure or not, but it's super interesting partnership and kind of shows that if like the largest telecom company is potentially partnering to create this type of product, even though it's still in pilot phase, still super early, it could mean that, they are preparing for, mass demand for digital assets. As a reminder, China also has a central bank digital currency, CBDC, called DCEP that they've been testing and piloting since like 2019. So, they've definitely been kind of on the forefront of the technology piece of blockchain. We will see, though, if they are pro-blockchain or pro-crypto, not just blockchain. Conflux rose 184% this week on this news and continues to really perform well. So we'll watch that one to see how that partnership evolves over time. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.